All right, everybody, welcome. This is Riley coming to you from Utah in the United States. It is Sunday morning here, and I just decided I want to do a little training on patterns and the effects, or what the theory behind these patterns are. These are the patterns that I use to trade mostly. I'm also going to go over a chart setup as far as how I set my chart up to trade the way that I trade. So if you follow me inside this group, you'll also be able to see the same things I see. So when you guys first open up your charts, this is what a brand new setup looks like. Okay, this is the default setup. So the first thing we're going to do is we're going to right click on the screen and we're going to hit the grid button here. Okay, that brings it to black. Okay, it erases the background. The next thing we're going to do is we're going to click this zoom out button until it's gray, and then click it twice. And then we're going to click right now it's on the bar chart. We're going to click it onto the candle chart. Okay. Then what you want to do is you want to go ahead and right click again. We're going to go to properties. We're going to go to common, hit show ask line. Okay. Then we're going to go to colors. And this is where your personality comes in. You know, you don't have to do it exactly like mine. I just do it this way because it's easier on my eyes and it's easier for me to read. So the bar up is lime, the bar down is fire brick right here, right there. The bull candle is lime, the bear candle is fire brick. Okay, now when you click OK, after you've hit the show ask line and change these graphics, now we have, now you should have on your screen what I have on mine. The next thing we're going to want to do is add our indicators. So I only use 3 indicators. Okay, go to indicators, trend, moving average. My first one is going to be the 800 EMA. So actually we'll start with the 55. Exponential, close, and we're going to do a medium blue. Hit OK. Insert, indicators, trend, moving average. And we want the 200. Exponential, close, and we're going to do lime. Okay. The next one is indicators, trend, moving average, the 800, which is going to be the white. Hit OK. So now we have what I use, the only 3 indicators I use to trade. Okay. Basically, what these are moving areas of support and resistance throughout the market. Okay, over my experience and over all the training and the mentorship that I've purchased, close to $10,000 worth of Forex mentorship, these have what I have come to realize are the most accurate and reliable in my opinion. Okay, so what you're going to do now is right click, hit template, save template, and then name it and hit save. Okay, so now that we have this, I want to go ahead and identify some of the patterns that I like to use. Okay, so the first thing I'm going to want to do is, okay, so some of my favorite patterns, so we're going to go to the daily chart. Okay, my favorite pattern is the symmetrical triangle. And what the symmetrical triangle looks is something like this. Rory, what's up? Something like this. Okay. Where you have 2 points at the top and 2 points at the bottom. You have a high point. You have a lower high. And you have a low. And you have a higher low. Okay. The other thing that I've come to realize is you want to make sure that your points are at least roughly 4 to 6 months old, where the starting of the triangle is and the bottom, the top and bottom. So the top obviously is back in October of 2018. The bottom is December, so it's just about 5 months ago. Okay, you have your one, well, I guess it'd be 1, 2, 3, 4 points of contact. Okay, now the symmetrical triangle, what you're looking for, first you need to identify trend. Okay, is this triangle working to the downside or to the upside? Well, it's difficult to tell at times because yeah, it's got me all jacked up too, the daylight savings as well, Rory. I keep looking for -5 Eastern time and it keeps putting me on -4. It's messing me all up too. But what you can see is that this market was in a downtrend with a correction. Okay, downtrend with a correction. Okay, you can see this correction right here. So in my mind, this triangle will most likely is the most effective to the downside. Now, what does it mean when I say to the downside? What that means is on a sell. I'm preferring this triangle go to the downside. And here's the theory behind symmetrical triangles, okay? The theory is when you have your triangle drawn, which you can see the front of it, the point to where you can reach a candlestick to the other end of the triangle in a straight line. Okay, so this right here doesn't work because that is not a symmetrical triangle. This right here doesn't work because it's not a symmetrical triangle. What does work is this point right here. You see this triangle pattern, okay? Now the theory is when it breaks and retests, so what you want is a break and then a retest. This drop over time, because we're on the daily time period, so there's going to be multiple, okay, there's going to be multiple impulses and corrections to this downside, okay? But the theory is this. It should go the length of this point here, okay? Which is roughly 630 pips. Now, will it go that far? I don't know. Anybody who tells you they do know, run for the hills. Because we're not fortune tellers here. We don't have crystal ball, okay? We predict the market with the highest probable scenarios that we can find. And a symmetrical triangle is one of those very highly probable scenarios. So far, is everybody following along with the symmetrical triangle? Is there any questions about the symmetrical triangle that any of you may have? I know there's only 6 of us on here, so people will be watching the replay, but for you 6 that are on here, is there any questions about the symmetrical triangle that you may have at this point? Roy says it makes sense. Roy, you've been on every one of my trainings, so I hope it makes sense. You're one hell of a student, brother. I love having you on. Anybody? It does. Okay, good. Okay, now what do I mean when I say that it may take a while to get to that area? So let's go ahead and do this. Let's go ahead and draw our theoretical take profit. 667 pips. Okay, so let's just go right here for number 6. So 115677. 115677. 115677. 115677. Okay, so in theory, get rid of this one. Okay, in theory, this is our take profit area. Okay, in theory. So what I mean by it could take a while, especially since we're on the daily chart, what I mean is this. This market could break, retest, and begin to drop. But in this drop, there could be impulse and corrections. Okay? Impulse, correction. Impulse, correction. Impulse, correction. Impulse. Okay? I'm not saying that as soon as this breaks and retests, you're going to have a drop straight down to this area. There's going to be movement, news releases, economical events that are happening. Okay, but in theory, that is the area. Now, what I have realized is on the daily chart, this pattern usually yields around 100 pips very quickly because of the momentum that is being built up inside. Okay, the momentum that is being built up inside. The closer it gets to the peak of this triangle, the stronger the momentum is going to be. It's like a spring. You know, if you have a spring, right? A horrible drawing of a spring, and this is the spring normal. When you push it down, just say to here, it kind of has a little bounce. But if you push this spring until it looks like this, what happens when you let go? It takes off. Okay? Or you up here, let go, takes off downward. Okay? So that's what I mean when I say that this could easily take a while. Now, let's jump over to okay, so before I move all this, does this make sense to you guys? Is this pretty straightforward? I mean, the symmetrical pattern is very easy once you can start seeing it to identify, and it's simple to explain. These patterns are simple. And yes, it really is this simple, you guys. It really does work like this. Maybe not every time because of some type of economical event, but the majority of the time it works. Yeah, it's like a pressure cooker, and it can only go so far. That's right. Adrian, good. I'm glad it makes sense. Guys, if this makes sense to you, I can move on to a new pattern. Go ahead and put a 1 in the comments. Okay, cool. Let's go ahead and move on. Oh. Awesome. I love the interaction, guys. Thank you. So let's go ahead and clear all drawings. Okay, clear that. Now the next pattern I want to show you is called an ascending channel. An ascending channel. So a channel is basically where you can mark something similar as this. Okay? And I'll show you why I'm marking this one this way. So this is an ascending channel. This is where you can draw a trend line. It's obviously to the upside. You have your low, your higher low, higher low, higher low, higher low, or low. Then you have your high, higher high, and higher high. Okay? So the way the channel works is this. So let's say we have this channel and we have this channel, okay? This is not a channel. When the market is moving like this, okay? That is not a channel. That is a correction phase or a sideways market. I can't think of the name now, dang it. But basically, this is an area where you would draw your support and resistance lines. Okay, this is, I guess, so this is a channel, but this is a sideways channel. Okay, this is not what we're talking about. I don't like sideways channels. They're just, it's more of a correction phase, more of a consolidation. Now, this is where you would have, like, for instance, this one, our low is here. Okay, the market moved up. There's 2 points. We have the origination. We have point 1. Okay, the market moved down. just skipped us down. It just kind of went like this, okay? Touched here again. There's 2. But this channel still isn't confirmed, okay? This channel still isn't confirmed. This still isn't a channel. And here's why, okay? Here's 0.3, 0.4, okay? 3 touches. Now this is a trend. This is a trend line. This is the area of resistance. This is where our channel is confirmed. Now we have a market that is moving to the upside within an area. Okay? This and this now confirms a channel. So just as before, if it wasn't like that, yeah, a 5-leg swing, but it doesn't have to be a 5-leg swing to confirm a channel. This could confirm a channel. Origination, 1, 2. Okay. Once we can draw a trend line on top and touch a point, and on bottom and touch a point, okay? So this confirmed the channel. This is our 3rd touch. This is our 4th touch, okay? What allows us to be able to draw these channels is 2 touches, okay? So now we can draw our trend line here. We have 2 touches. Draw our trend line here. We have 2 touches. Now we're trading within a channel, an ascending channel. So let's get that out of there. Let's talk about what happens with the ascending channel. So this is on most. I really don't go below the 1 hour time frame. Usually rarely even go that low except for entries. But this is the theory behind an ascending channel. An ascending channel. Okay, you have your point of origination here, okay? Because we had an impulse down, and we had our correction, okay? We had our correction. We broke through with an impulse down, slight correction, impulse down. Overall, this was a downward move. This had a slight pullback, but this was the move. It moved down, okay? This is the point where it started to correct. It came up, down, correction, down, point, confirm, drop. The theory is the market, 90% probability from what I've been taught and have tested and back tested, will come down on an ascending channel to the point of origination, which is here. Will it go straight down? Probably not. Will there be impulses, corrections? Most likely. But 9% of the time it will go down. People may debate that. How can you predict that? It's just data, okay? This isn't just some theory. This is data. Years and years of data. 9 times out of 10, I'll take my chances. Risk management, guys. Risk management is why risk management is so important. This is why risk management is so important, because that one time, if you're using improper risk management, you blow your account. Oh, the channel doesn't work, Riley. You wasted my time and you lied. No. What happened was you used improper risk management. You over leveraged. You blew your account when you never should have. 1 to 2% per trade, guys. 1 to 2%. And it's impossible almost to blow an account if you're risking only 1 to 2% per trade. So the theory is origination. So we're already in a corrective move. We've already broken through this channel with the impulse and in a correction slightly. So from the break, you're looking at a 263 pip move. Currently, we're here, so we still have 180 pips to go. This is a good trade to take. Okay, this is a really good trade to watch in this upcoming week. Now let me show you something very important. Pay close attention. We'll rewatch this. Let's shoot down to the 4 hour. Okay, so we have our channel that was broken, correction, impulse, correction. Let me show you. This is going to, I cannot make this up. This is going to blow your mind right now. You have your impulse to the downside, okay? You have your ascending channel correction. Remember what I told you? When it breaks that channel correction, 90% probability where it will go. Look at that, guys. Look at that. Where did this market come to? Damn near to the pip. Okay? Damn near to the pip. How do you feel about that right there? That what I just told you, I was able to confirm on a lower time frame. How do you feel about the fact that what I just told you, I was able to confirm on a lower time frame with an impulse and correction? Now look. Yeah, Roy, I don't recommend going below the 1 hour time frame simply because it just, I mean, the power just isn't there, okay? But the 4 hour, the daily, the weekly, they're great. No, you're right. Below the 1 hour time frame, it's not worth it. So now look what we have, you guys. Look what we have. Here's our target area. Here's our freaking target area. Look at this. Impulse. What do we have here, guys? What is this? Oh my gosh. Could this be another ascending channel correction? Oh my gosh. Look at that. Okay, we're back up here. 90% probability. Where's this going to go when it breaks? Okay, who knows? This may go. This may continue its way up until it reaches this area. Okay, and then shoot down. I don't know. That's why you got to watch. Set alerts. Okay, I'll show you what I would do with my entry here in just a second. But chances are this is going to break down here. Okay. So this is a trade. This is a live trade to be watching at, guys. It's a live trade to be watching for right now. So let me show you what you're looking for, okay? Let me erase this first channel. First correction. Okay. Okay. So this is where we're at in the markets right now. Markets are about to open here in about 4 hours, 3.5 hours, something like that. Okay. Now let me zoom in. What are we looking for as far as entries? Okay, if you have an ascending channel like this, gosh, I wish I had a larger time frame. You know what I do? Let's go back to the daily real quick. I'm gonna redraw these in just a second. I want to show you this though. Okay. Say that right now we hadn't seen this candle, okay? This isn't here yet. Okay, this right here, this isn't here. None of this is here yet, okay? We're currently on this candle. But I gotta erase that because my LCD is gonna drive me crazy. So my theory, what I've been taught is this: 4 to 6 pips below your. So we're here, right here. We're right here right now, okay? Okay, we got a evening star pattern: bullish, indecision, bearish. That's another thing. Go look at the beginners classes for this evening star. So we know that this should be coming to the downside. So what I would be doing is I would have a pending order roughly about right here. 1, 2, 4, 7, 8, 5. Okay. Now, why do we put a pending order? My stop loss would be 30 pips above inside the channel. Okay. And look, it only went 18. So roughly right here somewhere. Okay. Now, why do we put a pending order? Perfect example. Why? So if our pending order, let's just say our pending order was set for, we know what's coming here. We set our pending order here. Okay. These channels are usually broke by an impulsive move. Okay. So say you're sleeping, depending on your time zone, this move happens. Boom, breaks through all the way down to here. You don't have a pending order. You don't come in till the next day and realize, oh crap, look, we're already in an indecisive pullback now. I missed this whole move. You just missed 90 pips. With your pending sell here, 4 to 6 pips below the trend line. And yes, it's something you'll have to watch. You'll want to, as the market, if the market does this number right here, say it didn't do this, say it came down and it corrected and came down and corrected and went up and corrected and came down. You're going to want to move your pending order up with the market. So now instead of 4 to 6 pips from here, you want to be 4 to 6 pips from here, then here, then here. Okay, say you saw this channel, this area bounce off, morning star pattern. Okay, right here, morning star pattern. Go to the Forex basics under topics, under Riley's live classes. Okay, say we're right here. We have our pending order, 4 to 6 pips below this area because we don't know if the market's going to break down or come up. Well, now it's moving up. Okay, so you want to move closer to this trend line as the market goes. So because if you'd have left it here and this move would have happened, you would have only caught this little area before the pullback, which now you're basically negative. But as you're moving up with the market, now the market's here. So you come straight down. Well, I would go a little bit to the right and 4 to 6 pips below. So now you're here. Market breaks through. Boom. You just caught 100 pips. Okay. Say these aren't here yet. Now the market's here. Well, now you want to be 4 to 6 pips from this area. Okay. Say it doesn't tag you in, doesn't come through. Now you're here. So you want your entry 4 to 6 pips below there, because the theory is once it breaks, it's coming all the way down to the origination. Okay. Does that make sense to you guys? Does that make sense? You guys having some aha moments, or am I just talking out my wazoo? Let me know if you guys are getting some value from this. Does the ascending channel make sense? Cool. So we're going to move on to a descending channel, which is just basically the exact opposite. But before that, I'm going to show you on the lower time frame, when the market opens, what I'm looking at. So you guys who are on this live are going to see what I'm actually watching for. If you guys want to see what I'm actually watching for, put a 1 in the comments. Only the people on this live, or if you catch the replay in the next 2.5, 3 hours, are going to see what I'm talking about. You guys want to see what I'm watching for? Okay, let's go. Let's go. Jump down the 4-hour time frame. Okay, so here we are. Let's get rid of this. Okay, here we are. We're on the 4-hour time frame. Get rid of this. Oops. Okay. So we know from what I just said, we have impulse. We have a correction of an ascending channel. Okay. Right there. Okay, now we have another impulse of an ascending channel here. Let's jump down to the 1 hour and see if we can get a clear. I mean, this is pretty clear. Let's just go down one more time frame. Tighter stop loss, stricter entry. There we go. Okay, we can even go to here. Okay, do you guys see the ascending channel? You guys see this impulse correction? Do you guys see that? Put a 1 in the comments if you can see this. Okay, we're in a channel here. Cool. So, just like I said before, what I'm looking for, the market's here. It's going to open right around here, 4 to 6 pips, okay? So, on the lower time frames, I'll probably go 10 pips, 15 pips, okay? So, 124073. 124073. My pending order is going to be roughly 124073. Now, if this market opens, busts through, Boom, hit my order. Okay. There's my take profit. Guys, this roughly still has around 150, 140, 160 pips move that we're looking at. Okay, the cool thing is our 50 EMAs here. We go back to the 4-hour. No, we're close, but we're still all underpriced. They're all moving down. Okay, they're all moving in a downward momentum, which shows that this market is still in a downward move. I mean, look at impulse, huge correction. Correction, the upside, impulse, correction, impulse, correction, impulse. Do you see the pattern, you guys? Do you see this pattern here? Do you see how this isn't just, I mean, look, impulse, correction, impulse, correction, impulse, correction. Look, correction to the upside ascending channel, reverse down. Correction to the upside ascending channel, reverse down. Correction to the upside ascending channel. What is the highest probability that's going to happen, guys? We've just seen 3 of them. It's going to correct down, and we still have 150 pips to the 90% probability. Could it be that 10% that doesn't happen? Yes, very well could be. Am I going to take my chances? Yes, I am going to. So, guys, did that make sense for ascending channel? You guys clear on that? You clear on what I'm looking for? Cool. So any questions about this before I move on to descending? Any questions? Okay, let's move on. Let's go to descending channels. Let's see. There we go. Oops. So, descending channels are the exact opposite. They're a correction of an upward impulse. So, for instance, you see we have an impulse here. We have our descending channel. Guys, this is straightforward. A descending channel is reversal to the upside. We had our impulse. Okay. Technically, we could say this was one big channel of a correction. And when it broke, impulse to the upside. Impulse down. We had our sideways correction. Still a little bit of an ascending. Okay. What I want you guys to understand is this is a perfect example, okay, of what I was talking about. Oh, I just lost my train of thought like crazy. Oh, okay, descending channel. There we go. Yeah, geez. Sorry, my kids are making much noise upstairs. So let's look at this, okay? We have our descending channel. Okay. Remember the theory. Point of origination. Here. Guys, did the market make it to the point of origination when it finally broke? Clear down here. Did it make it to the point of origination? Did it? Okay. Yes, it did. Then that's the minimal, guys. That's the minimal correction. Let's see how many pips that is. Remember, we're on the daily chart. Your entry would have been here. Boom. 130 pips. And look how high it actually went. 345 pips. Okay. Point of origination, guys. It went to it. See that? Came right to it and then started to struggle almost to the pip. Okay, can you see the struggle it had right there? And then boom, broke through. Okay. So now let's look at another one. Got our impulse to the downside. Okay. Correction. What kind of channel is this, guys? Look. Boom. Okay. Slight correction there. There we go. There's our correction. Descending channel. Point, I mean, it could have been roughly, it actually looked like it was about right here. But still, even if we went here, okay, we didn't get to the exact point of correction, okay? We didn't get to the exact point of correction. But say we start our correction here. Look at that. When it broke to the upside of impulse, how many pips was this? I mean, regardless, you would have caught 180 pips, guys. Okay. So I can't make this stuff up, you guys. See if we can find another one descending. Okay. Here we go. Impulse. Correction. Okay. Point of origination is here. When it broke, went past. How many pips was that? 98 pips, roughly 100 pips. Okay, let's find another one. Impulse, see the, okay, here's one of the ones. So it's the daily chart, so it's harder to find. It's got on the 4 hour. So on the daily chart, let's find some descending. So if you want to get technical, we can kind of see where this pullback might go to on this 4 hour, okay? Because we do have a descending channel here. Okay. So on this current move, it broke through point of origination roughly here. So this is where this market could pull back to. Does that make sense, guys? This is current price. This is the one we just talked about with the entry on the 4 hour with this ascending channel. Okay. So roughly we could go to about right here for a pullback, which is roughly 60 pips. Okay. So did those descending and ascending channels make sense, guys? If they do, put a 1 in the comment or 1 chat box, please. Does the ascending channel and descending channel make sense and the symmetrical pattern? Okay, cool. Well, guys, that's really all I wanted to go over with you guys. I just on a whim was like, you know what? I'm going to show these guys channels and triangle. Those are really the only patterns that I use is triangles and ascending and descending channels or flag patterns. So any questions, guys? Do you have any questions? Let me know now in the comments. If not, then we'll call it good. If you guys want to see what I'm looking at for this next week, go ahead and go over to the topics section in the group. Go under Riley's live classes and watch yesterday's weekly outlook 329.19. And you guys can see what we went over yesterday as far as what I'll be looking to trade for the next week. Because like I said, I may only take 8 to 10, maybe 12 trades a month. Oh, and for those of you guys that have been asking about this little indicator right here. Whoa. this little indicator where it shows you all the other time frames, 255 EMAs. I'm working on getting the thing set up for a link, and I'll get that out to you guys. If you want to know more about it, just shoot me a message on here or Facebook, and we can talk about it. But all right, guys. Thank you very much for attending and watching. I hope I was able to add some value to your trading experience. And I'll be looking forward to hearing about your guys' awesome results in the upcoming week. All right, I'll talk to you guys later. See ya.